On today's episode, we are going to take a look at Apple. They just reported earnings about a week ago, so today's episode is going to be broken down into a few segments. The first segment, we're going to take a look at just some of the bullet points that happened with Apple during their earnings. We're also going to take a look at some recent news that came out with Apple. For example, the stock split and acquisition that they went through. So we're going to take a look at that. And the second portion, we're going to take a closer look at some of their financial documents to see how their balance sheet is at the moment. And finally, at the end, I'm just going to give my thoughts on the company, if I would invest in Apple, and if not, why I wouldn't. So let's get started. And before we get started, if you are a long-term investor, if you like to learn about growth stocks, and if you are new to my channel, make sure to hit that subscribe button. I appreciate all the support. And like always, to all my returning viewers, thank you. Make sure to hit the thumbs up. It helps the channel out so much. If you guys ever want to get in contact with me, I am very active in the YouTube comments. I also have a Twitter, which you can see on the description below. I have a Discord channel, which is free, and a weekly newsletter. Make sure to check out josenaharo.com. But remember, all this information is free. I am by no means a professional. None of this should be taken as advice. All of this is just my opinion. All right, so let's take a look first at price performance. And actually, before we take a look at price performance, let's take a look at who sponsored today's video. Today's episode is sponsored by my friends at 7 Investing, where every month they provide their top 7 stock market recommendations for only $17 a month. I think they do excellent work, so make sure to check them out. I have posted a sponsored link on my pinned comment, and I also posted a link on the description. So click there and make sure to check them out. All right, so like I mentioned, let's take a look at Apple's stock price performance. So in the past 6 months, Apple has returned about 37% to investors. And that to me is actually pretty impressive, especially because Apple, one of their major revenue segment we're going to take a look at comes from the iPhone sales. And iPhone sales were supposedly one of the markets that was going to get hit hard due to COVID-19. So it does not seem like that was the case. And their earnings, which came out on Thursday, did amazing because they were up Thursday after hours compared to Friday to now. They're already up 13%. So congratulations to all the Apple long-term holders. This has been an amazing return. In the past 5 years, if you purchased Apple in 2015, you are up 277%. And right, 5 years is not a long time. Me as a long-term investor, in theory, I want to hold the company for that amount of time. So I think taking a look at just the 5-year chart can really show you the potential of growth that can come in from holding a company for such a long time. 277%. That's almost 300%. So that's almost a 4 times bagger, and that's not something you see very often. The SPY, let's take a look at the SPY. This Apple has destroyed the SPY in returns in the past 5 years. The SPY has returned 58%. So not even a double bagger for the SPY, where Apple has almost been a quadruple bagger. All right, so now let's take a look at some of their earnings. The first thing is they reported on July 30th, 2020, so about a week ago, and their Q3 GAAP earnings per share were $2.58, which beat by 51 cents. The revenue was about $59.7 billion, and that was up 11% year to year, which beat estimation by about $7.13 billion. And that, to me, would be the major reason why the stock was up during after hours when they reported earnings, right? That huge beat in revenue by about almost over $7 billion beat shows the strength of this company. In the previous quarter, a lot of companies were not giving guidance for the following quarters. But this recent earnings, we are seeing a little bit more companies giving guidance. Apple, though, is still following compared to last quarter. They're not gonna give guidance for the current quarter, and that to me is understandable because I do believe like many are saying, the overall mobile market right now might be on a bit of a slowdown compared to everything else. Now let's take a look at the revenue breakdown. So like I mentioned, right, revenue for Apple was about $59.7 billion. Of that 59.7, 26.4 comes from iPhone. So a little bit less than 50%, I want to say maybe closer to 48, 47% comes from iPhone sales. And this was a huge beat. iPhone was only expected to make about 22.2 billion, but they did 26.4. So a huge increase in what was estimated for the iPhones. So we can see another reason. It seems analysts were underestimating the mobile market right now. Their iPad made $6.6 billion, where the overall estimation was 4.8. So it does seem like Apple was just destroying what the analysts were estimating for the numbers. Now let's take a look at their Mac products. Their Mac products did 7.1 billion, again beating estimations by 6.03. Wearables, home, and accessories were 6.4, 6.5, and that beat estimation of about $6 billion. One of the biggest one is their services. Their services is now about $13.2 billion. This one didn't beat estimation by much. Estimation was about 13.13. So by about $700 million beat. But it is pretty impressive to see all these other revenues are starting to increase. And to me, one of my biggest reasons right now that I don't like Apple is their iPhones is such a huge portion of the revenue. And I understand, right, Apple, that's their main product. But I definitely like to see all the other products increase in revenue, and that's what we're seeing in this quarter, which I think is pretty good news. And let's take a look at that revenue growth, right? So one of the products were services. Services was up about 15% from the year ago. iPhone sales actually rose 1.6% compared to year over year. Other product categories saw huge growth. The iPad sales were up 31%. And the company's other product category, which includes like the AirPods, the Apple Watch, grew 16.7% compared to the same time last year. So even though the iPhone sales weren't as big increase, every other major product saw very strong double-digit growth. And one of the main Cook says that one of the main reasons were obviously the work from home trend right now is boosting these sales. And another great thing that I did not know is iPad and the strong Mac and iPad results came in spite of inventory shortage. So it does seem like Apple did have some form of low inventory. So that again shows some strength. Imagine if they would have had all that inventory, the amount of money they could have collected. And then for all you dividend lovers, Apple does declare an 82% per share quarterly dividend, and that would be paid on August 13th for shareholders of record August 10th with ex-div of August 7th. So that's a pretty nice thing, right? You're seeing a company with nice growth also paying a dividend. So I can see why many investors are willing to purchase Apple. Not all good news for Apple, right? They did mention that their Apple 12 iPhone 12 is delayed. And that was pretty much mentioned by Qualcomm as well, that they mentioned that the processors will be delayed. CEO Tim Cook repeatedly touted the strength of the low-cost iPhone SE that launched earlier this year, and saying that model is leading to more people changing to Apple, right? So one of the metrics companies like Apple look like is how quickly are people changing over to a newer phone, or are they changing from a different platform? And Tim Cook is saying that this new model, which is a low-cost iPhone, is leading to higher switch in rate compared to the same time last year. They also mentioned that the iPhone 11 is still in very strong cycle. So even with the iPhone 12 delay, they don't really see much of a big impact coming. And the delay is only expected to be a few weeks, so it's not even months. Just a few weeks. This was actually a pretty cool news that I was just looking at and this came out August 3rd, so today. Apple made a new mobile payment deal, and this can actually be a competitor to Square if played right, and that's what Bloomberg says. So supposedly sources said that Apple paid about $100 million for MoveWave, which is a startup with tech that lets users tap a credit card or smartphone to a phone for payment. So integrating this type of technology into iPhones could turn the device into a mobile payment terminal, which would be a competitor to a company like Square. And I think that's actually a pretty cool idea. And remember, Apple has already some form of mobile payment. It has Apple Pay, it has mobile wallet, and they actually have their own credit card as well. So if this acquisition is true, it makes sense of why they would do it, and this acquisition that can make their services grow over time. The other big news that many people are talking about is the split, right? So Apple announced a 4-to-1 split, and many people are worried that saying, "Hey, how does this affect me?" It doesn't affect you at all. Let's say you have one ball, right? The best place. Let's say you have one ball, and you cut that ball into four pieces. You're still gonna have one ball. That's probably gonna be a bad example because the ball will be broken. Let's say you have a pizza pie, right? Let's say you have an uncut pizza pie, a whole pizza pie for yourself. Now let's say you cut that pizza pie into four slices. You still have a whole pizza pie. Nothing has changed. The only thing that has changed is you have smaller slices, but your overall value is still the same. So this stock split, a lot of people kind of think of it as a bearish or a bullish sentiment. To me, it's neither, right? I think now with so much technology right now of fractional buying of shares, it doesn't really make that much impact for the retail investors. Right now with fractional shares, you don't have to buy a full share. And I don't think it's bearish. A lot of people think it's bearish, but they're not doing it to collect more money. They're just trying to reduce. They're just trying to reduce the price of their stock. They're still remaining with the same amount of equity. Nothing is changing in the form of value. So again, a stock split depends on what is being purposed for. For Apple, there really seems to be no bullish or bearish case for it. So now let's take a look at the future growth for Apple. I want to take a look at how Apple is doing, and instead of what many people consider it a growth company. So here, their revenue growth for the next 3 years on average annually is supposed to be 6.7%. The industry is 6.6 and the market is 9.3. So to me, it seems like Apple, even though it is growing at high single digits, it is I wouldn't consider it a growth stock anymore, right? The market is beating Apple in terms of revenue growth. Now, if we take a look at earnings growth is even worse. Again, it's not bad still, right? Apple is expected to grow their earnings at 6.6% per year for the next 3 to 5 years on average. But the industry is supposed to be 7.9 and the market is supposed to be 22.3. So to me, it tells me that hey, Apple is no longer in that growth state, right? It's if one wants to look for a growth stock, this is definitely not the case. But again, right, with Apple, we're getting a company with great earnings, with positive earnings per share, with a great technology, and with positive dividends. So it's no free lunch in this market. All right, so the final thing I want to take a look at before giving my thoughts are taking a look at this company's balance sheet. So Apple right now has about, and we're going to compare June 27th of 2020 to September 28th of 2019. So that's the end of their 2019 year, which was about 3 quarters ago. So about 9 months ago. The first thing I noticed is their total current assets dropped by about 22 million. 22 billion. So they have about, and that major reason came from this cash and cash equivalents decrease. 9 months ago, they had about $49 billion of cash. Right now, they have 33 billion. So a decrease of about 15 billion there. But overall, this company has a lot of cash. They have $33 billion of cash, and they have about $60 billion of marketable securities. So that's close to $93 billion in cash to use. And for me, I just like to see a company with this much cash continue to do acquisitions, to buy companies that are in markets that will help them grow. Next, let's take a look at total assets. Total assets 9 months ago were about $338 billion. Right now, they're about 317, so a decrease of about $20 billion in total assets. Now let's take a look at their total liabilities. In theory, you see we took a look that assets took a really big hit, right? $20 billion less of total assets. In theory, you want to see total liabilities down a nice amount as well, but that's not the case here. Total liabilities were $248 billion about 9 months ago. Right now, they're sitting at 245, so only a decrease of about $3 billion. So they lost about $20 billion in assets and only lost about $3 billion in liabilities. That's not something I want to see, right? But remember, this is a company that has plenty of cash, so it's not something to worry about. But at the same time, even if you don't have to worry about it, you have to be like, as an investor, you have to question, why did that big change happen? One of the major reasons is they did look like they took out more long-term debt. And right now, with the whole COVID-19, they probably have a lot more expenses right now. So they had to take out more debt to make sure everything was working fine in all their stores with all their employees. All right, so that's pretty much it on Apple's and their earnings. Let's just give my thoughts. For me, I'm more of a growth investor. I tend to invest in stocks that are in companies that that are showing strong growth. So for me, Apple is not a company for me, but that does not mean it's a bad investment, right? I can honestly see why people are willing to invest in Apple, right? They have strong products. They're showing strong revenue growth in multiple sectors, right? Their services is increasing. Their other products are increasing. Even their iPhone sales have increased in such a crazy time, which I thought we were honestly going to see a decrease. So that to me shows the strength that Apple has. They have positive earnings and they have strong dividends. So again, just because it's not a stock for me, I can understand why many people are fond of it. So again, congratulations to all the long-term holders of Apple. You guys well deserve it. And take care, guys. Have a good night and see you next time.